What boom box?
Or the boom truck.
Oh, jeez.
And I even bought the lights.
Did you?
Oh, you did?
Yes.
Just gotta get someone up there.
Yeah.
Sounds like you might know a guy for that.
Yeah. I've been trying for 2 years.
Really?
There's 2 poles out.
It's better now than it was this morning.
It wouldn't be you doing it. Trevor already said, okay, when?
Oh, really?
Yeah.
Dang it, Trevor.
That day we were watching the water tower,
Well,
because I said I would pay,
that's right.
yeah,
Yeah.
their hourly, his hourly wage, or raise, or rate. I'm tired.
I get it. We're almost there to a few days off.
Trevor doesn't have a lot of experience with the bucket truck, so I don't know if I would trust him.
Thanks for the goodies.
You're welcome.
If I don't take them home, I don't have to share them. See how that works?
Eat them all now.
I'll ask Alice if you.
No, let's not do that. See, I shouldn't say that. Sorry. My name's not Sharon and I'm not Sharon, so there you go.
I'll ask her.
I'll just say I forgot them. How he took them, that's what I'll say.
I've already been into mine, so.
I told him to eat the sour cream cookies so I'd know how it tastes. Because I'd never made it before or had it.
I'll give you an A on the sour cream cookie. I'll let you know on the rest.
That's Nadine's order, or her recipe.
Really?
Yeah. Well, she got it out of cookbook, but
Still,
I had to get it from her.
doesn't matter as long as it tastes good.
And she's got my son-in-law's name right beside it.
Hmm.
That's what she said. Well, you want me to call him, Sarah?
Did you get a hold of
That's
him?
up to you, I'm still working on this.
Well, I sent him a text.
So how much do you guys get to drive around during all this?
Honestly, quite a lot. Sometimes it's not, like the furthest one I have is 3.5 hours away. So
Wow.
during the winter time, you're kind of praying like no snow.
Yeah.
Cause then that trip quickly turns into
Hey,
only
this is
5
Kim.
hours.
I was just wondering if you're coming to the meeting.
3:20, yeah.
Okay, we'll
So
wait
were
for you
guys in
then.
Des
That's
Moines,
okay.
Omaha?
Milwaukee.
Okay,
Yes.
alright, I wasn't
Yep.
for sure.
Oh, no,
Todd's
we're,
out in Omaha.
okay,
Okay.
sounds
Yeah.
good.
Gotcha.
Yeah, so.
Bye.
Thanks
He
for
forgot about
finding
it,
time to
but
get
he's
this
on his
kind
way.
of vetted with everybody, so.
Absolutely. Thank you for,
Everybody can have, you know what I mean?
yeah,
Like,
absolutely.
Question
This worked
time
out
and all
well.
that.
Yeah, thank you.
We're
for
only
scheduling
30,
this.
35 minutes, not 3 hours. So.
Yeah, yeah, exactly.
We won't keep you here all night.
It's a quick, if we were talking about insurance for 4 hours a night, you'd sleep really well.
I don't
To
think
continue it at the bar.
Yeah. It's a bedtime story.
Yeah.
We can bring the name tags and just
Yeah.
set them down at the
Right.
bar next time.
You might eat all the cookies then too.
Yeah.
That's awesome.
If you got time afterwards, you should drive around town.
Yeah.
They got,
They
a lot of
lights
people's
up?
got them out.
Really?
Okay, good to know.
I think we can make that happen.
Yeah,
Did
absolutely.
you see the park?
No.
No.
Just up here.
Oh, right over here.
Okay.
It's cool.
Oh, this is good.
I didn't get none of mine up today, or this year. Did you notice that?
Hmm. Oh, on a new house?
Yeah.
I noticed that.
I have like 20 blow-ups,
Really?
No way. Wow.
and I didn't get none of them up this year.
Really?
Yeah.
Yeah.
I've been
That's a
too
lot of
busy
work.
working on the house.
Are you renovating or?
Yeah.
Yeah. Oof.
Yeah.
That's a process.
To put in outside outlets so you can put.
Yes,
in
we
more.
did.
Yeah.
Yes, we did.
Clark,
Nobody puts in enough outside outlets.
Clark Griswold style, he's got like 30 piggyback on one, yeah.
We put 2 on the house, and then we're gonna put, like, the poles, like what you guys have for,
Hmm.
we're talking about running it, because under the big tree, there's always a breeze. If there's no breeze outside, there is always a breeze under this tree, and I love sitting underneath it. So we were gonna put like a little hut type thing and run she watered it, and that's where we're gonna have a coffee pot, small fridge,
Oh, nice.
Ah, there you go.
Good thinking.
so.
It's not looking like it's going to stream, but we are recording it and you can upload it later.
Has all that equipment been installed or updated and put in?
It has, hasn't it?
Then why didn't it work?
So the last time it didn't work, he said it was because YouTube did an update. It, for some reason, keeps it.
Who's
for
E?
Dakota something.
Can we ask him to come to the next meeting?
I don't know if he will do that or not.
Well,
He did spend 4 or 5 hours here the last time.
no, it doesn't do any good because it doesn't work, right? And we've already paid him? Let's ask him to come to the next meeting. I don't care if he wants to or not, I'll call him. But this is ridiculous. We've never had a series of months go by without problems with this equipment. I'm sorry. And how much did we pay?
Quite a bit.
$40,000?
No.
No.
Okay.
No.
What,
It was less than-
15,
Maybe 15.
Only
1500?
15. Oh, 1,500?
Or 15,000,
Yeah.
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 I think it was a little
We
less
could have
than
found a
that.
Radio Shack that's still in business and had better results than
You ain't gonna find Radio Shack.
We
They're
want it.
gone.
It's not next to a Blockbuster video.
Probably, that's probably where he got his equipment.
We
I
do
feel a
need,
roasting needs to happen.
we still need to get a microphone for there.
Yes, they're working on a quote for that.
But all you do is hear in the public their frustration about breakage, right? A meeting goes on and then it quits and then it goes on again,
Yeah,
so. Anyway,
If Dan don't show up, I get his cookies.
he's on his way,
Oh,
so you're out of luck.
you locked the door.
you shouldn't have said anything, you just should have slid them over and put them on top of yours.
He just pulled up.
Take a few.
If he takes long enough, I'll finish this plate and I'll just swap the empty one with it.
Oh man, that's awesome.
So did you get any of the cherry mash while it was up here? Or did they eat it all?
I didn't get any of it. It must have went over well.
Cause I brought up, what, 2 different plates?
There he is,
Yeah, I brought up 2 different plates already.
guarding mine.
Hey, Dan,
Didn't put it on the calendar.
That's
Uh-oh.
okay.
You're grounded. Yep. Kim blessed us with cookies.
Call to start municipal utility special meeting, council chambers tentative agenda, Monday, December 15th, 2025, 5:30 PM. Call to order, Herrick,
Here?
Crawford,
Here.
Belden,
Here.
Sherman. Here. Amy here. Okay. Agenda approval. Do we have a motion?
So moved.
Second?
Okay, how do you vote? Herrick,
Yes.
Crawford,
Yes.
Belden,
Yes.
Sherman,
Yes.
Avy, yes.
you're over half done.
Holmes Murphy discussion.
Awesome. Well, thank you again for letting us come out here today. I know there was a little bit of back and forth, but really appreciate getting out in front of you guys before the holidays too. I know, schedules get really busy, so we will try to not take so much time of yours tonight. I really wanna emphasize that this is a discussion for you guys as well, so if there's questions throughout the process, please don't hesitate to just speak up and ask it. I know I'm gonna throw a lot at you, so I will try to keep it, as high level. There's some details we do have to go into, but again, it's an educational session, and then also wanted to point out some things that Holmes Murphy found through going through the policies that we either think we could, implement that would help the portfolio, overall or change completely. So with that being said, I will go ahead and I will start with the property casualty side first to not confuse you. So we will do property casualty, all of the findings and our recommendation, and then we'll move forward with employee benefits. So to get started, we can go ahead and flip over to, I believe it is page 4, where it says property and casualty policy summary. So this is a very good start here. We wanted to kind of have a snapshot for you all to see all of the coverages that you currently have with respective premiums, carriers, and effective dates. So your overall effective date is April 1st, so we are in a really great with just approaching the marketplace and doing an overall review for the board. So you have everything with EMC, which is a fantastic carrier, besides the equipment breakdown, which you'll see at the top. That's with Cincinnati. So odds are EMC, I don't assume is very competitive in the equipment breakdown space. But one thing to note is at the beginning of this year, so January 2025, they released a statement that they are no longer going to carry equipment breakdown monoline anymore. So I was a 45-day non-renewal notice state, so you will probably receive your non-renewal 45 days out from April 1st. You could receive it earlier, but they are not doing it monoline anymore at all. They are only doing it if they have the property as well.
And
So
this is who that has this?
Cincinnati, so that
Cincinnati.
first equipment breakdown right there. So I don't know what reasons they decided to get off of it, but they went ahead and notified I would say all brokers. I don't know if they notified your broker. We have a lot of business with them. So it was a respectful thing to do because we could negotiate either getting a 3-year term with them or trying to get ahead of it and finding other competitive options. So there are plenty of people who will write it, but I just wanted to point that out right away that they will be getting off of the equipment breakdown unless your agent has negotiated with them or talked with them when they got the notice. So that's just something, I'm not privy to that. I don't know what the current agent has talked about.
I think everything that we do with EMC is on a yearly basis. I don't think there's anything agreed upon on multi-years inside of that, is there?
This is a 3-year policy.
What's that?
The boiler policy is a 3-year policy.
What's the boiler?
Cincinnati.
That's the equipment breakdown?
Yep. So do you know off the top of your head when that 3-year term is up?
2025 was the first of.
Was the first term? Okay, so then that's good to know. So you'll be in obviously till 2028 or so, but then after that, they will be getting off of it unless your agent had negotiated with them, can you stay on for a few more years or one more 3-year term? So that's good to know. And we can help with that when that comes up of who is the next best option to go with. And then another one I wanted to point out as we're just looking at the snapshot is the property, and then you see down here the COP. So I'll talk about it in detail a little bit later, but property and COP, so COP stands for Commercial Output Policy, and those two are, I would say, it's hard to say one and the same because they're not, but a commercial output policy can do everything that a property policy can do. So oftentimes what we see is we would just encourage that you go one way or the other. Commercial output is by far the best option you can have. I would say with commercial output, you have more influence on rates versus a standard property policy. That's ISO standard controlled, and you have no influence on that. So again, I'm kind of getting into the weeds here.
No, you're fine.
I'll talk about it a little bit later. But if you moved everything from the property policy onto that COP policy, it could streamline coverages, eliminate redundancies, and potential cost savings there. So, yep, go ahead.
You're not saying that you, by merging those two, you save the 13,816. You're
No.
saying the other one goes up, but it may not be dollar for dollar?
Yes, so I would say, and again, this was a very high level review. We did not go through coverage by coverage on each policy because that's something that we reserve a lot of times for clients, and it takes our team a long time to do. So for the sake of discussion and getting here in front of you tonight, they did a high level review. And so if we went through, I couldn't calculate the rate on the property versus the COP, but I would almost guarantee that the COP has a cheaper rate. So then with the property policy, if we can get it on that same rate, that's where you would see the cost savings.
And you mentioned there's some sort of ability to have input on the values of property itself?
So, nope, so with the rate, so the rate is controlled by the state.
Okay.
And how property policies are written versus COP policies, this is getting like really nitty gritty. Underwriters have more influence with COP. I don't know for what reason that is, but with the property, it's just a standard rate that you're given. And there's a little influence, but not much, but with COP, you oftentimes see that underwriters and or agents can have more influence on saying, you know, hey, they're doing X, Y, and Z on their property, they're trying to do whatever it is. There's more, I would say, negotiations with it. Can't guarantee it, but we see more times that they're open to discussions with COPs versus your standalone property.
Okay.
Would we have the same coverage or
Yes.
better?
Yep, so same coverage or better.
Okay.
You hit it on the head, and I'll kind of dive deeper, and it's a nice segue into the second page where you see coverage findings property. So this is just the property policy that we're gonna go over here. We went ahead and pointed out just a few things. I will try to go line by line. I won't read everything verbatim, so please stop me if you read something and you wanna talk about it. But one of our first observations is that there's no flood coverage. This is just something that we do like to point out to everyone. Obtaining minimal flood coverage is very cheap, if anything, sometimes it's not even an additional premium. So there is just a gap in coverage there that we wanted to point out, and you could have been fully aware of it, but it's just something that we like to bring up to all of our clients if you don't have it, because sometimes it's very expensive property losses if it's covered, or if it's caused by a flood. Like I remember back when Chow's flooded, Chow's Gymnasium in West Des Moines, that was one that was not covered, because they did not have any flood coverage. So it's just little things like that that we like to point out. And under that, you can see the earthquake coverage too. I know we're not close to any fault lines, I don't believe. I think the closest one is Missouri maybe. But it's just something to point out that there is a coverage gap there, and you can move forward obviously with no earthquake coverage, but we like to point that out. The third one though, we saw a lot of carriers adding this one on, especially I would say after COVID, and when inflation started hitting all of the economies very hard. So it's that roof surfacing limitation endorsement. So EMC is one of the most restrictive carriers in this space for offering wind hail coverage. So it's our job to negotiate these types of endorsements off of policies, because what this endorsement is, and this is just the, I would say, brief breakdown. We can go into the depth of what the policy language is at a different time. But it says after a wind hail loss to a building, the value of the roof is determined by actual cash value. So actual cash value is replacement cost minus depreciation. So ideally you want replacement cost on roofs, but especially with where we were at, and we're kind of, the market is softening a little bit right now. It's not soft by any means. But we would love to try to get that limitation off.
So it's on there now.
It's on there now. So if you can't get that off, then trying to negotiate at the time of the loss, could they do replacement costs instead of actual cash value?
So that's reflective in our premium then as well, right? They probably,
Not necessarily, I would say. If they did add replacement cost, I could see them maybe charging more just because of at the time of the loss. Yeah, but
Pat, isn't this what we had, wasn't there claims related to this
Oh,
a
yeah.
few years ago?
Yeah, about
Building damages?
About
Was there?
3 years ago, we had all that hail.
And how much was, do you remember what that claim dollar amount was?
No. I don't. It's been too long. It was substantial
I thought it
though.
was too, yeah. Anyway.
yeah, that's
We
something.
don't want, to me, I wouldn't want that, right? I mean,
And
if we have damages,
absolutely.
we're gonna wanna
Yeah, and with
replace.
where the market was, even I would say last year, carriers were not willing to listen to any of this, to be honest. There was no argument of like everyone was slapping this on every single policy. And so it's up to the broker to do due diligence every year to make sure that like, hey, that's still on there. We've seen clients get it removed. So it's just picking a broker that can make sure that they're staying on top of these things that maybe got added a few years ago,
Yeah.
to make sure that we have the best coverage today, because a few years ago, everyone had it.
Well, on the commercial side, like on the home side now, it's age of your roof if they're gonna insure it for, is it the same on the commercial on that too? or is that-
It depends on, yes, it depends on the age of the roof. So obviously the older roofs, some are not willing to move past actual cash value, but those newer roofs should absolutely be replacement
I
cost.
think on homeowners, it's like 15 to 17 years at.
Yeah, commercial a little bit older, I would say, anywhere, I've seen up to 30 years is, after 30 years, actual cash
Oh,
value probably won't
okay.
get removed. But we've seen under 30 years, you can definitely try to negotiate or make your point of like, we've done repairs or we're doing everything we can to preserve it, so.
Why wouldn't it be applicable to the entire house when you get replacement cost for a building? That would include the roof, right? So
Mhm.
let's say the entire building is wiped out, not just the roof.
Mhm.
Is that a separate item as well, where you're only paying for the actual value?
At the
If
time.
you build $1 million building and after 30 years it's only worth 100,000.
Yep,
Well, wind and hail is a separate coverage, right?
yes, wind and
Okay.
hail is a separate,
All right.
cause sorry,
Good point.
the
No,
next,
that's fine.
the next sentence there is, in addition, cosmetic damage to a roof is not covered if it's caused by wind or hail. So again, carriers did this right after COVID, I would say was like the turning point.
Storm was, right?
They're the deratios, yeah.
Yes,
The two
that's-
deratios.
Yes, but in my head, it's like one of the same events.
There were two of them, 20
Yes.
and 21 or something
Yep,
like that.
yep.
So there was a substantial claim that probably drove that.
Yes.
Right?
The deratios.
Well, but
two of them.
whatever we filed, yeah. But I mean,
Well,
he's talking
that's
about-
how it affected everybody.
Yep,
I mean,
yep,
my carrier actually left the state because of those.
yes.
And so now they're becoming more flexible since, gotcha.
I would say not all of them are flexible, but they're definitely more willing to have those conversations, whereas in the past, it was like, here you go, and you can't talk about it.
Does ICAP handle things the same way?
So I can't speak to how they handle it, I can't speak to their policy language, I tried to give them a call before, multiple times. I heard maybe a rumor that they don't work until after the new year, I don't know if that rumor is true, but I can't get a hold of anyone over there
Wow.
right now.
Okay.
Cause I was just trying to get in front of it of like, hey, I know that
Right.
last year you spoke with them, trying to just repaint a picture of like, hey, we're coming in and we're evaluating everything, we're ahead of the game this year, like, can we just, pick your brain for 30 minutes, 45 minutes to even see if you would offer something more competitive, but I know with EMC specifically, they have gotten better in the space of hearing clients out, of case by case, it can even be building by building. Some of the older buildings, they might be like, we're not okay taking off this, but for the other ones, like, I still think that's worth it, is to analyze the portfolio
Sure.
and see if
Yeah.
we could fix some things there. So then, moving on to the next one, unless there's any other questions on that one. We did notice that some of the location addresses don't match the county assessors pages. That's just something that's very, I would say, in the details. But why this is important and what our team does a really nice job of is making sure all of these are verified. Because at the time of the loss, if the location address is wrong, then the property will not be.
It's not covered then,
It's not
is it,
covered,
right?
yeah. So even if there's like I don't wanna say a misspelling, but I have seen it of like, if it's road and it needs to be street, it cannot be covered. So just going through and making sure our team does a really nice job on making sure that all of that checks out and it's 100% accurate, and then we present that to you, are these accurate? Cause we would hate for that to happen if there's a loss and everything's done right, but the address is not right. So that's just one, small thing. We can go ahead and flip to the next page, page 6. So this will go into the commercial output policy. And so as you can see here, when we go through it, there are some similarities because the coverages are similar. They have different things on each policy. I don't want that to get lost. But as you can see, there's a theme of this is similar to the property policy. So first observation here is your business personal property. The current program has a 90% coinsurance clause on that. I don't know if your current agent has explained what coinsurance is, or like if you just know from your own personal insurance, but coinsurance is at the time of the loss, what you did carry divided by what you should have carried times the loss minus the deductible is your loss payment. So ideally you would have no coinsurance on your business personal property and just agreed value, because that's you and the carrier entering a contract saying this podium is worth $500. If there was a fire, I'm getting $500 for this podium. But what you currently have is 90% coinsurance. So this must be insured to 90% of the replacement cost value at the time of the loss. And if it's not, then that penalty will apply. So I just wanted to.
I'm sorry, I don't
Yep.
follow the penalty.
So that's that 90% coinsurance there. And that's the equation of what you did carry over what you should have carried at the time of the loss.
All right.
Times the loss minus the deductible. So just to give you some insight of like the underwriting world on how that applies. So we always try to get coinsurance waived in any case. Agreed value is, yeah, we're agreeing that this costs $500 and we will pay you out $500.
What if things are missed? I mean, how
Yep, so that actually brings back down to the second point, that personal property locations are scheduled, not blanketed. So to your point, what if things are missed? Oftentimes what we see and what we try to advise our clients to do is to just do an overall blanket of business personal property. If, you can't go through and be like, this costs this costs
Right,
that. But
right.
what are you comfortable with as the city? If there was a fire here, how much would it cost to replace everything if you flipped the building upside down and shook out the contents? What's that number figure? So we would try, and our recommendation is to request a blanket coverage, so just saying $15 million, that'll do. So that's
That's only
another.
for furnishings or whatever, personal property.
Yep,
Okay.
yep,
Which would not be vehicles, that's separate.
Yep,
It's just going to be
correct.
furnishings. Okay.
yep. Best way to think is if you
In the
turn that
library, it'd
building.
be the books, and here it's the chairs.
Yep.
There.
You
Okay.
flip that building upside down, anything that falls out of it, what would that dollar amount be? So again, that offers flexibility, eliminates underinsurance, and simplifies the coverage. And it makes your life
So
just
does that mean
easier.
the first one goes away?
So sometimes you can see on blankets, they will put a coinsurance clause, but again, that's on,
Well, I mean the personal property. What do you need that for if you have a blanket policy as well? Or is it personal property blanket and you don't have anything else? You don't need anything else?
Yep, so personal property is, you can call it content, so we're talking about the same thing here.
Yeah.
The personal property, if we got a blanket, we would recommend or negotiate that you don't have the 90%
Okay,
co-insurance clause.
gotcha.
Because they still could on a blanket say at the time of a loss, if you didn't insure up to 90% of it, that clause is gonna then.
Gotcha. Okay.
Yeah. And then the next few items, you'll see the same, no flood coverage, no earthquake. And then on your commercial output policy, you still have the same roof surfacing limitation endorsement added. So just like what we talked about on the previous one, but this is just on the separate policy. And then the page underneath it, page 7, same thing about the addresses don't match the county assessor site. And then something that we found a little interesting is there's some property excluded from the COP. I don't know if we were not able to locate these generators on any other policies, and again, this was a brief overview on our team. We can dive deep into that if we can't find it, to be like, where are these? But that's just something that we saw right away, that there could potentially be a gap in coverage there, because those 3 or 4 generators are excluded specifically.
Pat, where are these?
I don't see, these are all the old ones right here, the ones we got at the light plant.
Do you even have these anymore?
Yeah.
Okay, you do.
Yeah.
Okay.
Are they operational?
Yeah, if we had to, we could.
You could run it?
So
Yeah.
They should be, so you didn't find them in our existing policy?
Not on the COP.
So how did you identify them?
I believe, I can't speak for my team, that they were specifically listed as excluded.
They were specifically not
Mhm.
insured, okay. Is there, I mean, would you have thought they should not be? Because they're not, maybe would they have
We
done that?
don't use them a lot, but there
They
could
still
come,
they still have value.
oh yeah, they still have quite a bit of value just in case.
Yeah, no, I get it, I
Yeah.
just didn't know if there was if they excluded them, there was a decision to do that, and I didn't know what would cause that.
Yeah.
And
I don't
Sarah, I
know
forgot to
either.
say thank you for mentioning that 3-year deal too, that's good information to know.
And that is something easy to go back to the carrier and say, hey, if we were your agent, why are these excluded? How do we get them back on? It wouldn't be premium bearing of a huge dollar amount.
Sure.
But we would wanna make sure that we got that updated and just
Yeah.
taken care of.
Yeah.
And something I should add is that, if you're a client of Homes Market, what we do is a statement of values.
Mhm.
And so it makes it really easy for you guys to review. It lists out line by each coverage. So we'll just take property for this instance. Every location, what the dollar amount for the coverage is, if there's deductibles, if there's co-insurance, all the details about the building. We list that out to then review every year. So then something like this doesn't happen where it's like, well, where are those generators? Or if we list it out to you, like, it's excluded, well, it needs to be included. That's a simple add at renewal or whatever it is. So that's something that, we pride ourselves in, and just making sure that we can catch these things, so gosh forbid something happens to them, they're not covered. Flipping over to page 8 for general liability, we just had one observation on it, was that, the pollution exclusion, there's limited, coverage there for $50,000. Our recommendation is to just see if you could obtain a higher limit of $100,000, because oftentimes when there's a claim with something like that, $50,000 is gone like that. And sometimes, I would say more times than not, the carrier will just give it not for any premium. So it's just one of those things to see if we can get a higher limit.
Shouldn't this be covered on the city side because it's wastewater?
It would be, you would think.
Water and wastewater treatment plant. Is that supposed to be for both, though? The city has a wastewater,
Yes.
we have a water treatment plant, I'm
Yeah.
assuming yeah, it's aged and all that, but it has some, is this just for both of those scenarios?
Obviously the
Okay.
city has separate insurance. This is just in case you were pulled into a lawsuit. This is
Okay,
coverage that's
okay.
kind of thrown in there to protect you from that.
Liability, sorry, I
Yep.
didn't see that, yeah, gotcha.
And then down page 9 for workers' compensation. An observation was not all locations are listed on the policy and do not match property locations. So the recommendation is to make sure to list all locations in which employees are or could be present. This does not drive additional premium by any means. Missing locations as covered locations on your workers' compensation policy. This means at the time of loss, one of these locations may not be recognized as a location that people are covered to do work at. So just going back in and making sure all those locations are up to date.
So if someone's injured at an address that doesn't match, then
There
that
could be potential, yeah,
incident may not be covered.
correct, yeah. And then another item down here is the policy currently right now has a 13% scheduled debit applied. And this is something that's at the underwriter's discretion. It's not state rate that they have to take or anything like that. Underwriters can add a credit or debit to accounts. And your account is very clean on the workers' compensation, so that's our job as agents to notice that and our job to get that off.
So I don't understand what that is, a 15% scheduled debit applied.
So when reading the workers' compensation policy, it has all the rate with payroll, and that's how they come up with your premium. And then each carrier every year has to go to the state and figure out what rate they're gonna come up with to say, yep, this is what we're gonna charge a city worker for the rate. There's then a line item that has a scheduled debit, and that's up to underwriter discretion. They can add a debit or a credit based on how the account has been performing. So if the account has been performing great, sometimes they'll add a credit. If the account has been performing, or poorly performing, I should say, they'll add a debit.
So from this comment I'm reading, we've been overcharged for workers' comp based on our history.
And your history is pretty clean. So
That's
I think they're just, sometimes, I would say underwriters get lazy, and they sometimes need to take rate to make their book make sense at the end of the year, so they can do it on a ton of accounts. And it's a sneaky way to kind of add something in there, and it's our job to catch that. And so, again, I am not the agent, so I don't know if there's been previous discussions with them or whatever that is. But that's something glaring for us to see, to go back to EMC and be like, why are you doing this? Because it just takes.
Is that common that you see that in this case?
Yeah. It is, unfortunately, and it's.
It's 15%, what's our work comp, I can't remember. It's in here, I know, didn't you have it in the first front here?
It is.
Oh, it's only 77.
Yeah.
Isn't there like an experience ratio too?
Yeah.
Your experience
mod or
mod, I
something,
believe, is
yeah.
a 0.9, maybe a 0.91.
Anything below 1 is not?
Anything below
okay.
1 is favorable. So I was trying to do some loss ratio stuff too, and it doesn't sit right with me to see it. Like, we would definitely want to get that removed, and if anything, if they won't remove it, then take it down to a 5. It shouldn't be as high as it is. So that's something that we would like to see a change in.
So what's your flexibility to, again, to me, I know there's only two places you can go, EMC and ICAP, right? Is that not the only two? So,
Yeah, I'll be curious for 2026 if there'll be other carriers that'll be more competitive. It just depends on.
there are other carriers in Iowa besides those two?
Yeah, oh yeah.
Okay,
Yep.
who else offers?
I don't know specifically for cities. I wanna say there's EMC, ICAP, there's one other that sometimes plays, then they'll play well on clean accounts.
Okay.
And so that's something that I can go back and see if there's anyone else. But EMC, I would say they've been a really great carrier for you guys. I would just say there's more broker capability here to clean up the program, in the sense of having a team to make sure they're constantly reviewing the stuff and making your job easier. Your job's not insurance. Your job's not to go through each policy and make sure that you have all this. That's why we're here. And so I don't know, of course, ICAP, I would say, would be my first recommendation, to see if they wanna write it, they will be more competitive.
So I think what happened, and again, this is just recapping from, I think
Yeah.
across the industry, everybody's insurance went up across.
Mhm.
And so we raised our deductible to try to self-insure, I think to what, 25,000 or 50,000 on,
50, I would say.
just so we didn't move the needle on,
Right.
on the, so we went from what, 5 or 10 to 50? I mean, we did a drastic deal because I mean, they've done a good job managing reserves and the likelihood of,
Absolutely.
expenses. Anyway, that's not a safe place to be at, in my opinion, long-term. And so how do you hedge against these 20% increases
Right.
that this EMC keeps shoving down our throat? That's how I feel about it. And it's almost a monopoly, and so that's,
Yep.
to me, if, my own opinion, I definitely want at least another bid from another company. If we are clean, can we go separate, even if the city chooses not to? These
Right.
policies are independent, correct?
Yep, they
Okay.
are correct.
So I don't know, that's all I'm getting at.
Do you know how long you've been with EMC?
40, 50 years,
Oh, okay, like for the
Yeah.
life, yeah, okay.
my lifetime.
Yep. I will say, sometimes what we do see is carriers just fall asleep at the wheel. They know that it's an account that they're gonna renew every single year, and they can bank on that premium. And of course, over time, they do have to take rate in order for it to be profitable a loss does happen, then it has to make sense for their books financially. But something I cannot harp about enough is having the right broker partner fighting for you.
Mhm.
Because what we typically like to do on accounts, especially if you're clean, if a carrier likes you, it's the easiest thing for you to stay. It is hard to move, change, all of that. Now, if they're taking rate or potentially not treating you fairly if a claim came up or whatever it might be, then of course, I think you should send it out to market, see if there is something better that you can come up with, and I'm totally not against going to ICAP. ICAP can quote this. I think that they could be competitive and we could see what that looks like. But with EMC here, I just think it's potential either underwriters asleep at the wheel or maybe the broker is not doing their due diligence on making sure that EMC is staying competitive. So we can go ahead and flip to number 10. Auto was very clean. Right now, there's symbols 7 and 8 being used for comprehensive and collision coverage. Only thing that we'd potentially look at doing is to negotiate to include 10 and 8 with wording includes all except the 1992 Butler trailer. And this just allows for broader coverage when adding and deleting vehicles and less potential for uncovered claims. It's not something I can guarantee because symbol 10 is something that is carrier specific. I don't know if EMC offers it, but symbol 10 is one of the most custom symbols with their definitions. So it's just something that I think would be worthwhile of looking into just to make things easier for you all. And then the boiler and machinery, that one's with Cincinnati for the next 3 years. But right now, they currently have actual cash value on equipment greater than 25 years of age and will be limited to $500,000. Our recommendation when to get this taken off and changed to replacement cost, and it removes that coverage gap. And then property not covered, wind turbine, blink, page 11.
There's no page numbers on these, by the way.
On the bottom.
Right here.
Geez, I don't have page numbers.
Oh, yours
There's no
don't
page
have page
numbers.
numbers. I got
Is it
page
not?
numbers.
No.
Are you guys in this book? No, you're not in that
The
book.
new
Oh.
one, the new one.
Oh, sorry.
Sorry,
We're
you were
living in
not
the
agreeing
past.
with, yes, I'm
I
sorry.
didn't know there was two books.
Oh my goodness, I'm
We're living in
sorry.
the past, sorry.
Yeah.
Page 11 is where we're
Yeah.
at.
All right, that's our sets of books.
So you're telling me that we have no coverage for the wind turbine?
So right now, no. I don't know if that falls on the city.
Do you know?
Now I'd have to look into it.
So that's something, again, that we can easily look into, but just wanted to bring to your attention. And then to flip to page 12, for the umbrella, current limit is $1 million. And our recommendation is to get optional quotes up to $5 million. Umbrella is something that's not really that expensive for what it can do in the event that you hit the umbrella. We live in a highly litigious society right now where claims, more than ever, have been going to court, and so they've been hitting that umbrella. So that's why you've been seeing an increase in umbrella premiums. We're seeing them soften a little bit. We just got our yearly report, and they actually came down about, I think it was 7%, decreasing. But nuclear verdicts are skyrocketing by nearly 140%. So it's something we like to tell all of our clients that if it's possible, we recommend at least getting a $2 million limit umbrella. But if we can, we always like to say the higher you go, the better. But if it's not necessary, it's not. But just something to point out.
Is an umbrella specifically covered to lawsuits only, or is it also loss with property damage?
So umbrellas do not cover property. It just
It's only
covers your liability lines.
Okay,
Yep.
Gotcha.
And then down on page 13 for management liability, very strong there. There's only $2 million for the employment practices liability. I think it's still $2 million very strong, but we would just look at potentially seeing if they could bump it up to $3 million for no additional.
Explain what that is, I don't even know what this is.
Yep, so,
Sorry.
nope, you're all good. Employment practices liability is, it helps protect you against a lawsuit due to someone's jobs, like discrimination, wrongful hiring, firing. anything like
Conduct of
that.
an employee type thing, is that right? Where it's a lawsuit
Yep.
protection? So-
Yep,
okay.
yep, so anything, with employment
Okay.
and an employee.
Gotcha.
So if, that's just again, something that if there's no additional premium, you might as well bump it up.
Sure, yeah.
And then on page 14, cyber liability, cyber liability might be too too low. These are just kind of some thoughts. I wouldn't say anything was glaring besides the last point of there's no social engineering coverage included in either the cyber or the crime. And social engineering we're seeing happen more and more. Social engineering is like if an employee receives a phishing email and it says enter your credentials. When they get those credentials, they then can go into the city's database and have access to everything. So currently in your current program, there's no coverage for that. So that's just something that we're seeing. The bad guys are getting smarter and they're getting really good at their jobs, and that's a claim that we see more times than not. So looking at
So you've had municipalities impacted by this,
I wouldn't necessarily speak to municipalities. I would just say our clients.
other clients, business
overall.
clients, or whatever, gotcha, okay.
Yeah, because they're just getting smarter. And then crime, there's only $150,000 limit of crime coverage. Crime coverage helps protect businesses from fraudulent and criminal acts against them. This limit can be exhausted quickly. Would look to see if there's $1 million sub-limit. And then the crime deductible is low at $1,500, but I would say you won't see that much premium savings by going up $1,000. So that's it on my end. I'll kind of conclude and then we can go to benefits so we're not all over the place. I would say there's multiple different ways that you can go about it, and there's no decision that has to be made today. You definitely can think on it. Again, we have an April 1st renewal, so you could think for a few weeks and then into the new year, let us know. But I would say there's a few ways. One, we could try to get ICAP reinterested this year. They would need to do a loss control visit. That can't be scheduled anyways until after the New Year's, just due to their renewals, and can't get a hold of them, don't know if they're working.
So explain what that means, a loss control visit is.
Yep, so they would come out and they would look at a few things. I don't know what their specific things would be for your case, but for the sake of discussion, they would come out and just walk around different properties. They would come see what your practices are with employees, or looking at vehicles, how some work's done. Like they basically, if you wanna call it like shadow, they walk around and kind of like job shadow someone for, I don't know what their time would be, but call it 2 hours, 3 hours, whatever it is.
In total?
Yes.
Okay.
So like a 1-day thing that they would come out and do. I think last year ICAP maybe came out with Todd. So they would wanna do that again to see if they're comfortable writing the account. And then from there, if they're comfortable, then they would quote. So if they're not comfortable, then we're kind of stuck in the same position of what do we do? So there's another way. I'm gonna check to see if there's gonna be any other carriers that could be competitive in this space and get back to you. But our other recommendation would be you could sign a letter that's a broker of record letter that would be firing your current agent and hiring us, because we can work with EMC in Cincinnati. And then we can come in, take this over before renewal would be our recommendation, so we can clean it up and make sure to go through, add all these things, go in detail on all of this stuff to make sure all locations are right, those generators are covered, all of that, before renewal. So we're not playing catch up or defense of like, okay, this renewed, how do we make sure we endorse this? That's when it gets really messy. So our 2 recommendations would be, first, to see if ICAP would be interested, have them come out, do a loss control visit, and see if we could get terms. Second recommendation is become the broker of record before renewal, take care of the renewal and get us in a better position to then hopefully, ideally, if ICAP is where we wanna be, clean up whatever needs to be cleaned up so that we can reposition ourselves to be favorable for ICAP. Any questions on that? Okay, that's all for me right now. Questions can happen, but I'll let Megan talk about benefits.
And if you guys shouldn't feel like you can't eat your cookies during this, because I know that was a lot.
So can you explain sorry, before,
Yeah.
can you explain the timeline on like the bidding process and ICAP and how long they take to
Yep.
do, you know?
Yep, so I would say typically, carriers don't necessarily look at accounts until like 120 days out from renewal is their sweet spot. So sometimes, and they appreciate it, especially if there's loss control visits involved, they'll wanna book those sooner than later, cause it saves them time too, so they don't have to crunch and try to fit in, their timeline of renewal. So I would say, if we could get someone from ICAP to respond and get a loss control visit out here sometime in January would be favorable, I would say. Cause then that leaves us in the driver's seat and not playing, just hoping that they're gonna give us terms. Get a loss control visit out here, see if they'll offer terms, and if they're not, reconvene and see if you wanna stick.
Is it useful to have board people at those, or is that unheard of or not?
I can't speak to that right now. Let me do some homework on that, because I think it can either go two ways. It could either hurt or it could really help. So let me get back to you on that
I
one.
gotcha.
I wanna be candid on that.
No,
of
that's fine.
What's
I
gonna
just-
position
I'm
you in
just
the best
asking.
way.
Sure.
Yeah. So let me get back to you on that one.
Okay.
Is anybody opposed to going down that step, to doing that loss control visit, looking at ICAP and getting those numbers?
I'd be in favor of doing it,
Yeah, same here. You've had the same carrier for decades,
right?
Mm-hmm.
and there's gaps here. What does ICAP, you know what I mean? Where do they
What
come
I
up?
dealt with the ICAP last year through Holmes Murphy, they had come out one other time, and the guy said that he didn't have a very good visit, and he would talk to his boss, and his boss said no. So that's why they did not do it last year.
But why did they not have a good visit? What was their reasoning behind that?
There was a couple of them that wouldn't work with them.
So then when that does come about, to me, it's important to have a board member there, so they're able to report back to the board meeting.
That's just what I was told.
Yeah.
Yeah, and I would say something that we try to help our clients, we help them prepare for loss control visits and try to get everyone on the same page, because we are not the carrier. We don't
Sure.
know all the questions that they're gonna ask, but we're on your side. We're trying to
Mhm.
make you look as attractive as possible. So we can kind of coach you through that. And I know maybe last year timing wasn't in our favor either.
I was on the conference call with Todd and the guy from ICAP. I can't remember his
Yeah.
name.
You just don't
There
want
was
a fire
like
drill,
4 of
that's
us
all.
on there.
Yeah. Okay, and how was that process? How would you explain it from, again, I wasn't on the call, so I don't know, like, was ICAP drilling questions, or what was
No.
okay. Was it just virtual, or did they come out?
No, they had already been out,
Oh, I see,
and
I see.
I don't know if it wasn't that year, it was the year before or something, I don't know. There was one time they came out and he told me that there was a couple of people that would not work with him,
Mhm.
and he didn't give no names, that's all he said. And, I says, well, could you please talk to your boss? So, you know, he says, I'll see what he says, and he called me back and he said no.
Yeah, the
So
thing is,
were they just not providing the information that he needed?
I don't
or
know.
you just don't know?
yeah.
All he said, there was a couple of people that would not work with him.
Yeah.
That's all
I
he
don't mean
said.
this in the wrong way, but nobody likes insurance, but
Yeah,
you have to
no,
have it, right?
absolutely.
Not
And so-
offended at all.
Yeah, no,
Necessarily.
but you have to have it, and so we're volunteering our times to try to provide the best value for our citizens.
Yep.
And so, you know, a board member or two should be present when that happens.
Yeah,
So,
absolutely.
I mean, we're not wasting tonight and your time and the last meeting and every other time we discuss this,
Yep,
so,
yeah, and that's where
period.
we're trying to work too with ICAP right now,
Yeah.
because circumstances change every year. Insurance, businesses, they change every 6 months, every
Mm-hmm.
day. And we know that this has been a priority for you all, and trying to, you know, get better terms if possible, cut down on savings, hopefully do whatever it takes to keep your people safe or whatever it is. Like,
Mhm.
that's our job to paint that picture. And so the only notes that I have from the ICAP visit is something about seatbelts, I believe. There was something maybe about seatbelts. So it's our job to help before that, to be like, hey, let's try to get the notes from last year and make sure those things are buttoned up before they come, if they're gonna come back.
Sure.
So do you know anything about seatbelts?
Yeah, don't wear 'em.
Why
No.
not? You better, cause the new cop here in town's stopping you if you don't wear them. Honest to God, he
You
is.
know there's an Iowa law that says if you're under a certain speed limit in town, you don't have to wear the seatbelt.
No, there is not.
No, there's not.
No, there
Actually,
is not.
At Pioneer, that was a firing offense if you were caught driving without your seatbelt. Whether you're
Same
in the
with
parking
post
lot,
office.
whether you're in parking lot or out on the road.
Yep.
And in fact, that's the first thing they ask, and I'm sure they could check my vehicles,
Well,
tell you if I had
Pioneer-
it on, if I was like.
Pioneer, you
Yeah.
couldn't go on their property if you had a motorcycle without a helmet. So you
Yeah.
better bring a helmet
Yeah.
with you once you get on their property.
Same with the post office,
So,
and they have cameras in their scanners.
So is everybody okay with these
Yeah.
gals proceeding with that?
Yeah, a
Yeah.
quick search
Whatever you call
of,
it,
a quick
loss.
search of ICAP, they cover hundreds of cities,
Yep,
right?
yep,
So
they do.
it's not like,
They're on all of our city accounts, but I shouldn't say all, 90% of them.
So So when that visit happens, just have board representation there through the entire I mean, whoever you want, Kim, but
Yeah.
that's, we can't have accurate information if we can't get the information.
Absolutely. Awesome. Okay, any other property casualty questions?
So, no, thank you for the thorough overview.
Yes,
Absolutely.
thank you
Coming out
very
here and
much.
walking through
Yeah.
the details
Yep.
and everything. Very much appreciated.
Awesome. I will also be thorough, but hopefully not as long. So, look, okay. So my goal here, so I looked at your guys' coverages, right? And thank you for sending that census over and getting all that information. I will spoil this because I can see some of you are looking ahead already. I think our recommendation is to stay where you're at because you have very low deductible, like you have very rich plans, and you're not paying as much as you would pay if you were to go out standalone and try and offer coverage to your employees. It's really hard. I included this first slide because we are seeing incredible increases. Like this has been one of the toughest renewal seasons. Even the people that have been working at Holmes Murphy for like 30 years are like, I've not ever seen it this bad. And there's a couple things playing into that, right? We're seeing pharmacy being the talk of the town with all the moving legislation that's going on. High cost claimants are not helping. We're seeing vendor partners start to there's a lot of mergers and acquisitions happening, so all of that's becoming more and more corporate. They're not, looking at people in Iowa, in Des Moines, Iowa, even our biggest employers. It's just like the market right now is not super optimal for smaller employers such as yourself going out and standing alone. So, yeah, just wanted to set the scene there. Happy to answer any questions about the landscape, but kind of wanted to give you, if you'll flip to the next page, slide 20. Or excuse me, not 20, I flipped ahead one too many, to 18. I just wanted to kind of break down what it means to be in a union for your insurance versus standing alone, because I think I missed that the first time I came out, and I apologize for that. But the way that you actually buy your insurance is different. I remember we talked about purchasing power a little bit the last time we were out. The union takes tons and tons and tons of employees, uses all of that premium, and they essentially do what's called self-funding. So they don't actually, in a fully insured market, you rent your insurance, right? You pay a set premium every month and then everything's covered. And if you have a really bad loss one year, you kind of eat the cost of that the next year with an increase. Your trajectory is reset. With this, they're pooling everybody's premium and just paying claims as they come. So it's truly just based on the performance of how that larger group is doing, and you have a little bit more insulation because you are not only Stuart municipal utilities and city claims running. So if you have $1 million claimant, you're not going to get just destroyed for it the next year on your renewal. You have the subsidization of the whole entire union.
Because it's self-funded and it's a pool versus.
How big is that larger group?
Thousands of employees.
Okay.
Yeah. So you're essentially operating like that pool behind the curtain. It still looks fully insured to you guys. It really doesn't make a difference for the employee experience. But on the back end, it's self-funded. So just kind of explaining why you have a little bit more insulation and protection in that, and your renewals are a little bit more predictable, right? Especially as you're trying to budget right now for this next fiscal year. It's probably a lot easier to do that as opposed to if you were to go out age-rated, everyone's going to be underwritten based on their age, demographics, so like gender, geography, like all of that's taken into account, so you're paying more every single year as you get older. And I don't think that's super fair for employees if you have the option to be in this larger pool that's subsidized. Does that make sense?
Why do you say it's subsidized? Because of all the other people in it?
Yeah,
Okay,
because all the
gotcha.
premiums
Okay.
coming in. And
Gotcha.
Just a bigger pool.
Sure.
yeah. So kind of broke down what it means, right? Like I touched on the pool of risk. You have predictable renewals, that trajectory. Like if we're thinking, my brain does math, and I apologize. It's probably why I work in insurance. But if we're thinking about the line of your trajectory of your renewal, and when you have more people together, it's way flatter. Like it's just going to be a lot more manageable to fight a 3, 4, 5% increase every year as opposed to the 15s, 20s. I even saw some 50s this year, which is like no one can afford that. That's not sustainable. So it also is something to be said for the negotiating power. Like they are able to have these plans with really low deductibles, and they're less expensive than if you were out buying them just as your standalone municipal utilities board.
So comparatively to other communities with municipalities, I think our cost, what do we come up, Sarah, was it 20,000, 22,000-ish?
Roughly
Yep.
20,000.
Okay, so is that, I looked at just some other communities, and Sarah and Ash put a table together that shared that, and it seemed like that was fairly reasonable. To go out and get this same plan in the private market outside of the union subsidy, you're saying it'd be, I mean, or is there a way to size that?
It would cost more. Like, it just would cost more, and you're seeing comparable numbers with
Mhm.
those other communities because a lot of them are in trusts. So if you flip actually to the next page, finally, page 20, a lot of our cities and counties are in trusts, like IGHCP is an example of one, but you have to have 50 employees.
Mm.
But those trusts, I mean, do you foresee growing your employee population anytime to that level?
But
Yeah.
this was Panora that was very comparable to ours, and they went to a policy where they were requiring their employees to pay 20%, and they were doing some, I can't remember all of the terms, it was all on their website, it was very well done, the administrator did a great job setting it up with the council and all that.
Mhm.
They kiboshed it after a year or two and went back and paid 100%, and I can't remember why, but they were giving them money towards their HSAs in lieu of the 20% or something like that. So you had the employees building a savings account, right? So when you don't go to the doctor, you're, you know.
That sounds like a high deductible account.
Yeah, it might be, I can't remember, but anyway, they flipped back and they're still within that same, they were the closest ones to us as far as cost, but, you know, there's a lot of discussion in the community about, you know, 100% of health insurance being covered. And, you know, this type of stuff helps that we validated that it's not, you know, it's not out of line. And how we get it is less expensive than the alternative, so.
And I will say, if, my answer would probably be different for you if you weren't subsidizing 100% of the insurance.
Gotcha.
Right, if it was more complicated and you were doing some different contribution strategies, then I might say, okay, just purely based on your cost, right? If
Mhm.
you're willing to cover X amount every year for every employee you've hired, then it might make sense to consider going out of the union, and then you can implement things like a high deductible health plan or those other types of plans for your employees. But then it gets a lot more complicated, and the education piece is required, and it's not just okay, this is what's covered at this, there's no other, it just it just gets complicated.
Sure.
And that's fine, like,
Yeah.
that is the right solution for some people, but based on what I heard about wanting to control costs, maintain trajectory, and your guys' plan designs, like, they are so rich. If I could have that insurance.
And then we hear that from our employee, I mean,
Me
from
too.
Yeah.
from employees, and so it's something they don't wanna mess with. We don't wanna change it, we also wanna validate that it's, you know, reasonable for the citizens to have to pay for. And so
It's
that's-
better than government insurance.
Yeah,
Oh,
and that's,
totally.
and that's
Yeah.
great, it's
That's
just,
saying something.
Yeah.
we aren't doing our jobs if we don't verify that, you
Yeah,
know,
absolutely.
inspect it, so.
No, and I think that you guys looking into it, I mean, similar to what you're doing on the property
That's
side,
same
like,
thing.
you
That's the
have to,
exact same
in
thing,
this market,
absolutely.
in this
Yeah.
day and age, you have to validate that you're paying the correct amounts and not overpaying for anything, but, like, my recommendation right now is just sit tight with where you're at.
Can you offer an HSA on top of this, independent from Lineco Insurance, can you bring in?
No, there are some different ways that you could offer, there's a couple different types of flexible spending accounts. There's a lifestyle spending account where you're essentially just depositing, you know, $100 or $200 for your employees to go.
So-
Use
Most
those
of,
or
most of
things?
the benefits that are like that, because, you know, I'm in the union, that's negotiated through their contracts.
Yeah,
So it's not just us paying it, it's all the other employers that are in that union are paying the same
Gotcha.
thing. You know, like, my union, they, provide an HRA.
okay,
So every hour that I work, like 56 cents goes into that HRA.
okay,
Now now to get that out, you know, and other unions are different. They may have a credit card that they just go ahead and pay. Me, I have to get an EOB and then take that EOB and submit that to my health and welfare. And then my health and welfare reimburse me that money that I had to pay out of pocket.
gotcha.
So
But
that's
this-
something that the unions would probably have to negotiate for if they wanted an HSA or an HRA. They would have to negotiate that through their contract,
Through the union contract.
through the
outside,
union
that's it.
contract
Okay.
for their health and welfare to do that. And then
Gotcha.
that would, all the
Well,
employees,
Currently,
or union
our
members
guys,
would
that's
have
not
to-
in their health insurance.
Health
is not
insurance,
in-
actually, that's true,
That's
yeah.
not
it's
in their
outside.
contract.
Yeah.
if
and
it's
ours
not in their
isn't.
contract, they haven't negotiated for it.
So
So
he's
if they
just saying
want
that-
it, then that whole union would have to say, we want an HRA we wanna negotiate that through our contracts.
Yeah.
When their contract is up and they go to
Right,
renew
well,
their contract.
normally, health insurance is part of their contract. It's not, it's Stuart.
No.
It is not part of their bargain contract.
Oh, it's not part of their bargaining
It's
unit
just
wages.
contract,
But-
okay, I get it.
So if it's not part of the contract, or employees that work for the utilities that are not union, can they be offered an HSA? I guess, I'm trying to say, if Sarah Stover wants an HSA, can you offer that as an additional benefit?
I looked
Is that
into it.
useful?
What the
Is it
difference
useful?
is, and number one, the deductible for like a single person, the minimum is like $1,600 that they have to pay out of pocket before their insurance pays in.
I'm not talking about.
That's a HSA.
I'm not talking about, health savings account, I'm not talking about changing line code at all, I'm talking about layering on an HSA on top of it.
But
Can
it
that-
has to go along with the high deductible plan.
Correct, so you
That's
could
IRS.
layer
Yeah,
it.
that's fine.
That's IRS regulated.
Okay, no, that's fine, that's why I'm
Yeah.
asking.
So if
And
you
usu-
guys were offered high deductible health plans through Line Co, the answer would be yes.
Okay.
Because you have those co-pays when you go to the doctor's office, you can't, cause it's
Right.
double
And
dipping
usually your
instead.
Gotcha.
out of
Okay.
pocket maximums go way up too.
Yeah,
But it
Sure,
happened to me,
yeah, yeah.
they more than doubled when we
Yeah.
went on that
Yeah.
stop.
what other questions can I have? I didn't bring a ton of prepared material,
You're
cause
fine.
I think you guys
No, that's
are
fine.
sitting in the right spot right now. But
And I appreciate you being upfront about that, to
Oh,
say,
yeah.
hey, that's,
that's my job as the broker. I would
right,
never
but I
wanna
mean,
put
I'm
you
just saying
somewhere
that,
where
that
you're in
means
a
a
worse
lot
position.
credibility wise, that helps, you
Yeah.
know,
And I'd just like to let y'all know, we did get a notice from Lineco saying our rates are not increasing this year.
yeah, I mean, that's.
Stay, stay.
You're lucky.
Sarah, can there be some sort of couple sentences in the minutes about this particular part? Like, we've been looking at property, casualty, work comp, and health insurance is over. I mean, we've already dealt with it. I mean, if you. Unless, I mean, we wanna keep shopping.
So what does that mean for you guys to become our broker of record?
Yep, so you can absolutely hire Holmes Murphy just on your property casualty side. We don't have to be together as much as we do like to be a duo. We don't, unfortunately, Megan will probably not be coming to any other meetings as the health insurance.
Unless there are
agent.
cookies. I'm coming if there are cookies.
You're at my
so-
house.
Sarah, maybe the better way to say that is Holmes Murphy does not recommend any changes to health insurance.
Yeah,
Yeah,
absolutely.
That's the right way to
Yep.
say that.
I'm only about 10 blocks away.
Don't tempt me with a good time, Kim.
So for next steps for property casualty, and correct me if I'm wrong, I would say, and again, don't have to answer this today, if we can get ICAP to come out here again,
Mm-hmm.
potentially if Holmes Murphy can provide any sort of insight or recommendation on how to prepare for a loss control visit to become the most favorable thing that we can do, that's our job. I think they come out here, hopefully do a loss control visit, and see if they would be competitive this year. And then if not, we can reconvene and go from there. I just don't wanna give like a million steps to you all.
That's
when
fine.
We're pretty far out.
If they come out, would they come out just on the utilities alone? Or would there be utilities in the city?
So
How
we're
would we
having
do that?
separate discussions with the city as well,
So it would be, they would come out on us alone?
on you alone right now,
Okay.
yes, yep.
And one thing, I don't know if you really wanna, we've talked about maybe going in with the city if they
No,
would
I
agree.
think it's better that it's us alone.
Yes, you do, because they have more claims than we do,
Well, we also
and
have,
that's gonna hurt us.
if there's employees that aren't cooperative, we can make sure ours are, but we have no control over the city of.
That's a good point.
Right.
So, but yeah, but they have more claims than we do, and they would hurt us.
Any other insurance products that you guys have looked at, you guys represent, life insurance, I don't know, make it up, that you feel as though our employees don't have, that other places do have, or I don't know. I mean, any other things that we should be looking at?
They do have life insurance.
What about long-term disability?
Any of that stuff.
Short term,
Package was comprehensive.
Aflac.
I'm
yeah,
just
they have that
All
flag.
I was thinking of.
We got you guys here, I'm just
Yeah,
trying to
I
don't know.
ask, so.
The only other one that comes to both of our brains is we have a surety team, bonds team. So if you're performing your own, I guess maybe that'd be more city, performing your own construction. That's just
Okay, gotcha.
That's another.
another
we have.
section that we have. Otherwise, No, I would say everything falls in line with what we typically see with cities.
Okay.
Yeah, so I would say no right now, but that's a really good question.
Gotcha.
We don't have anything else, so if there's any other questions.
I don't either.
Anybody else?
Hopefully give you some time back.
So then, January, you'll reach out to
Yep.
us to figure out how that works?
Yep,
Is that-
so ideally I'll reach out to ICAP first, start talking with them, and just hopefully come to you with, hey, they can meet on X, Y, and Z dates. And then if they can't, I will get that information over to you sooner than later. There's no point in wasting anyone's time of, if we think that they're not, if we have to do so much work to try to get them out here, we also want them in a good, if you wanna call it headspace of like, if they're already preconceived, like, I'm gonna deny this, it's a waste of everyone's time.
Right.
So,
You just gonna send us an email saying,
if that works
yes,
for you all, yes.
Yes.
And
Yeah.
our regular meeting's the 8th, so it's
yeah,
already.
no use of you coming out just for that.
Yes, okay.
Nope.
Okay, yep, so I will hopefully have an update to you. I would say, give it a week or two after the new year, just with, again, I don't know what they're doing.
Yeah.
For them to get through, some of their workload, and then I will have either dates for them to come out or a declination, so.
Okay.
And then we'll go from there, and then it might make sense for me to come back out again of like, if ICAP's not going to offer anything, does it make sense to make a broker change?
Cause the next
Okay.
one you'd be able to come to is February,
Okay,
so.
what's the date on that? Just
Be the second Thursday of the month.
It's crazy that we're already looking.
Yeah, isn't that
February.
crazy? Yeah, absolutely.
Okay. That's all for us.
Very thorough work, thank you for the.
Thank you so
Thank
much.
you.
Thanks for having us out here, we
You
really
bet.
appreciate it.
We done?
Be the 12th,
Adjourn.
February 12th.
Okay, thank you. Enjoy the cookies.
Yeah. I have been.
You could come to my